Welcome to the first in a series of videos about multiple streams of income. And this particular video is going to look at earned income. Now, before I get in and explain earned income, I'm recording these videos, I should say, when we are going through very difficult economic times. Countries have been placed into lockdown, economies are suffering, people are losing their jobs, and income is very difficult for many people. And one of the things that I learned many years ago was that if you created multiple streams of income, that it didn't matter what the economic times were, you would always have one source or more of income coming in. Now I hear people saying you need to have 5 or there are 7 types of income and you just need to have 1 or 2. Other people say you need to specialize. Everyone has their own opinion. And my opinion is that you need to be in as many different types of income streams as you can be. Now I've identified 8 types of income streams, and those 8 types are earned income, profit income, dividend income, residual income, interest income, rental income, capital gains income, and royalty income. And in this series of videos, I'm going to go through all 8 categories of income and explain to you how each of them works so that you can start to build those types of income for yourself. You're not going to do them all overnight. That's impossible. It takes a few years to start to build them. But if you've got a little bit coming in each of the areas, the compounding effect, as long as you're working on them, just taking a little bit of action on each one of them, the compounding effect will kick in and you will gradually start to build that kind of income. An income that will support you no matter what the economic times are. So let's have a look at the very first income that I mentioned, and that is earned income. Now, for many people, earned income is about having a job. And yes, having a job, there's nothing wrong with having a job. It is one of the types of income. But I talk about investing. Investing is my niche, and business is one of those niches. For me, there are 4 categories of income. You have business, property, paper, and cash. And as long as you operate in those 4 categories, then you have income coming in from the 8 types of income that we mentioned. And earned income as an investor is being an employee of your own company. Now, when I lived in New Zealand, I had a business over there. Well, I had multiple businesses in New Zealand. And I paid myself a wage. I became an employee of my own company. And what that did was, 1, it paid me a salary every month. 2, it made sure I paid taxes every month. And the third thing was that as an employee of my company, I qualified for the pension scheme. Another benefit of being an employee of my own company was the taxes, because rather than being someone who drew down an income or drew down dividends from the business, being paid as an employee meant that I got all the tax benefits of the profit of the company that I would have had I been an employee of my company. So if when I was employing staff, I could take their expenses off the profit of the company, and I was able to do that for the time that I worked within my company. So earned income is not necessarily you going and finding a job with someone else. If you have a business, and normally it's a structured company, which is under a limited company. I think in America you have different terminology for them, so you will need to check with your accountant what is the best structure for you. But limited company means that the business is its own entity. So if I am Karen Newton and I work for my company XYZ Limited, then XYZ Limited is its own entity, and I become an employee of that business. As a result, that business is able to claim all the expenses that I put onto the business as a tax deduction. So being an employee means that I earn regular income from my business. And that's what everybody wants to do, is earn regular income. So I earn income from my business, but instead of drawing it down, I become a tax deduction for my company. The other benefit is that as I take income, as a self-employed person, I get to pay tax depending on which country I'm in. Here in Spain, I pay tax on a quarterly basis. In the UK, I pay tax twice a year in January and July. Each country has its own rules. And what I do as being an employee of my company is that I pay tax as I go along. But that tax forms part of my overall tax that I pay. So it's not a separate tax that's paid as an employee. My accountants are able to look at all the tax I pay in a financial year, whether it's from earned, whether it's from profit income, whether it's from dividends. They pull it all together. They look at the tax that I have actually paid. That comes off my bill, and then I just have the remaining tax left to pay. So it helps me as well with cash management, because I know that as an employee of a company, I have already paid a certain amount of tax, and it allows me to budget easier on the tax. And I'm one of those people who keep it simple. I just love simple. So earned income is any business that you have that is an entity in its own right, and you become an employee of your own business. You are paid a wage or a salary, whatever you want it to be. You pay tax as a normal employee would pay. You have the rights to be part of the pension schemes that your company has to be part of. You are an employee of your own company. So that very first income that we talk about is earned income. Becoming an employee of your own company. So have a look at what you're doing currently. If you have a limited company, talk to your accountants and see what is the benefit. Now I know that in the UK, in March this year, when they started the lockdowns, if you were a director of a company and you took drawings or dividends, then you weren't entitled to any of the benefits that the company gave to people whose businesses couldn't operate. If you were an employee of your own company, then you qualified for the furlough schemes and you were able to pay yourself as an employee of your company. So it's not something new. The government are encouraging you to be an employee of your own company. They looked after you if you were an employee rather than a direct dividend earner from the company. So it's worth talking to your accountant or your IFA, whoever you have, and see what are the benefits to you of having that earned income.